Who would have thought that Christmas actually does come in July? Just ahead of the 4th of July holiday, the House has passed the BBB, or the OBBB. How many B's is it? I don't know. They've passed Trump's bill.
Phenomenal victory we achieved just hours ago when Congress passed the one big, beautiful bill to make America great again.
And so while you're enjoying burgers, hot dogs, and fireworks, I want to make sure that you are prepared for this 4th of July holiday with information on how the OBBB Act affects you as a business owner. One thing I will say is that if you haven't watched this video, I go into way more depth about all the specifics of the bill and the things that the bill contains. What I will say, most of the things have remained the same, but there are a few tweaks. And so in this video, we're going to discuss exactly what those things are. So from a personal side, pretty much everything has stayed the same. The exclusion on tips and overtime pay remains. The extension of the child tax credit remains. There are some modifications on how it's calculated, but all of it remains the same. What has been removed from what we spoke about in the previous video versus what we have at the time of this recording is that there is not going to be the $4,000 Social Security deduction for seniors. There were some modifications, just slight modifications to the mechanics of the car loan interest, but again, pretty much everything stays the same. Now, from a business perspective, again, pretty much everything stays the same. It is official. We have 100% bonus depreciation, which is a huge game changer for real estate investors and business owners in this year. If you have not already spoken to your tax advisor to find out whether or not a cost segregation study would be good for you and your business, now is the time to do it because we are clear on exactly what these provisions are. Another provision that has remained, but it was slightly tweaked from the bill that went to the House, is the qualified business income deduction. In the original bill, it was proposed to increase to 23%. That has not increased. It's staying at 20%, but the deduction is now permanent. And I just want to be clear, these provisions weren't just things that were for a time period. There were a couple provisions that were for a time period, like the car loan interest deduction, but a lot of the deductions that were established by the TCJA, the bill that was passed in 2017, are remaining, and they are not just extended, they're made permanent. Another deduction that I think is worth noting is the qualified opportunity zones. Those were set to sunset at the end of 2026. Those now get extended to 2033. That is an awesome opportunity to completely defer and eventually wipe out capital gains. So ultimately, everything that we reported previously in the video that we did a couple weeks ago is pretty much the same. But the difference is now we're not guessing about whether or not this stuff becomes legislation. We are sure that it's going to become legislation. And so that means that now is the time to start planning, taking advantage of what we now know is going to be passed into law. So if you are looking for a tax advisor, somebody who really wants to take the time to work with you, understand your story, and understand how these provisions will impact you and how you can use them to your advantage to make your tax bill as low as humanly possible, then go ahead and click the link in the description. I'd love to have a conversation with you and see how I can best serve you. If you found this video helpful, I think you might like this one. If you like content about tax strategy, I highly recommend that you watch this video here.